Hello and good afternoon. I welcome you to today's Trading Spotlight webinar here together with Admirals. It's Friday, it's the 25th of February 2022. And pretty crazy, very exciting times. Not really sure what to say. I think you all follow the news right now, what's happening in Ukraine. I have to admit, I have to be honest, I didn't see that coming, to be honest. It's like very completely speechless, let's put it that way. And that's not just or from an emotional perspective, but also in terms of what's happening in the markets right now. You probably have seen the amazing volatility. Yes, the crazy volatility we have seen. I think we haven't seen such a high volatility market, or high volatility market environment since the Corona pandemic hit. That was in 2020, around the same time, February, March 2020. And now the developments in the Ukraine. If I followed the news a little here before the webinar started, and it seems as if there's now some developments in direction to talk to each other. The Kremlin, respectively Moscow, and Kiev, respectively, the Ukrainian not parliament, but Ukrainian Prime Minister Zelensky. Somehow it seems as if they agreed to talk, whatever that means. You probably follow the price action in the markets. You've probably seen the sharp rise. That's a first positive sign. The DAX already pushed to a level which I had on the radar for next week, probably 14,500. Probably today, if US markets show some continuous trend. However, so very emotional times, very volatile market environment, and probably an environment in which you probably got caught on the wrong foot on one or the other trade. And so that brings us somehow to today's topic for the webinar, on how to tackle losing streaks, not just in your trading in 2022, but probably also in your trading in general. I'll give you some hints how I how I work in this context, and I just hope that you can profit from this knowledge. Probably have witnessed another webinar in the recent past. I think it's 2 weeks ago, I'm not really sure, but we had one on a coin flipping, in fact, and I introduced a concept around Monte Carlo simulations here, and we want to take this as a fundament here, in fact, to build from. It's not necessary that you've seen the webinar, so just that you're aware that we will here go through some of the details. I invite you to watch the recording, respectively, the recording on the YouTube channel here from Admirals, if you like to get further information on Monte Carlo simulations after this webinar here. By the way, YouTube channel, subscribe to the YouTube channel. And it's not just subscribing to the YouTube channel, but also if you like what you will see now, please leave a thumb up here. Leave a comment, leave a question below the video. I'd be really happy to help out and answer your questions if there are any. And let's jump into today's topic and today's webinar. So how to tackle losing streaks in your trading in 2022. And before we start, first of all, I'd like to introduce Admirals to you. I think you probably have already heard about Admirals before. Most likely you will have registered here for the live event on the website. So main reason you might have been there is not just for the webinar and registration, but probably because you already found out or wanted to know more and already found out yourself about the financial products being offered from Admirals since, I think, 2001. It's like 20 years now. One of the biggest players in the FX and CFD world industry here, with over 8,000 financial instruments being offered. And having seen a rebranding which took place in the last year from Admiral Markets to Admirals, and the reason for that is that now there's a development taking place that is not just the focus on financial services in regards to brokerage, trading, and FX and CFD, but also multi-asset brokerage, first of all, physical stocks, ETFs, and so on and so forth. But also in addition to that, further financial service provision in terms, for example, of a credit card being offered. Also now you have the chance, you probably have seen it in the Traders Lounge. It's not just that you can that you can access a gold wallet. You probably wonder what this is. So having your deposit being made, from which you can then transact it to whichever trading account you want to use. Let's say you have one trading account where you trade FX and CFDs, and you have one where you trade physical stocks, an invest account in this context. And then you can also say, without leverage here, you can, I'm not sure about the English word. So it's in Germany, it's parken. It's like you keep the money in the account first, and it's a gold denominated account if you want. So you participate. It's such an environment in which we find ourselves then in terms of developments in the gold price, for example. And so now it's also possible to use crypto here. So for example, Bitcoin, respectively, Ethereum, and other cryptocurrencies here, and have a wallet there. So it's not the classic wallet you probably have seen. So which you can have via, I think, MetaMask, for example, comes to my mind when it comes to Ethereum and so on and so forth, but a wallet within this Traders Lounge. So long thing short, check it out. So head over to admiralmarkets.com, download the demo. You need to register there for this Traders Lounge, and then just click around and see the offering from Admirals there. It's definitely worth your time. And fully regulated broker, probably to put this on top here, fully regulated by the SISEC in the EU, by the UK, by the FCA in the UK, but also from the ASIC in Australia, for example. In addition to that, we have also a regulatory body overseeing the business now in Jordan. What this means for your business, since the offering itself, when it comes to trading, brokerage, invest solutions, so on and so forth, stays the same. What this means, you can find all details on the website, respectively, to reach out to Admirals directly for further information. Yeah, one broker in this context. I forgot to include one slide, important slide now, but when it comes to multi-asset brokerage, there's also one thing coming to my mind now: fractional shares being offered. So let's say you want to save, let's say, 200 euros a month, and now you say, hey, I want to invest these 200 euros into a Tesla stock here, physical stock in this case, for long-term investment. Well, the only problem is Tesla's trading around $800, I think, right now. So came in quite heavily after all the developments in the market, but still with a fantastic growth outlook, probably you come to this conclusion. And now I say, well, I can't buy one Tesla share, not necessary, because with 200, in this case USD, let's make things easier, you can, for example, buy 0.25 Tesla and then continue to build this up to one Tesla share with a saving of 200 euros or USD in this case per month. Further information also can be found on the website. And now let's dig deeper into today's topic and today's agenda. I make long thing short here in this case. So today's agenda will be about constructive criticism. It will be about adaptations in your trading, and it will be about mental stability. I could imagine that if we watch this now, probably you won't really see where all this will guide us to, but I think it will become quite clear in the upcoming minutes. First of all, let's start with an introduction here. So let's recall, as I already mentioned, let's recall our last webinar we had on flipping coins and Monte Carlo simulations. In this case, where I introduced this concept, those Bernoulli distributed simulations where you had several graphs, and you will see the picture here on the next slide. You probably remember what we're talking about there. And what we did within this webinar, we ran a simulation on a strategy, which we had also webinar on. That was, I think, in December, if I'm not mistaken. It was on the S&P 500, and it was on an approach, which is a purely 100% intraday trading approach on the S&P 500, trading the open range breakout in this case. And what we found out here when running with the parameters I gave within this webinar, what we found here in the backtest, which we ran over a period of something like 10 years, if I'm not mistaken, was a hit rate of 47%. And so you probably also remember that we put in the input parameters. We saw that the strategy was profitable. given this time span during which we backtested the strategy. And so in this context, you probably recall that we had, when we ran the simulation over 1,000 trades, we had a streak of 15 losing trades in a row. And so what I then told you was that from a purely mathematical standpoint, it's completely normal, and put this in quotation marks. So it's completely normal that you have these streaks, and it happens. So the other hand, or the other coin, let's say in this case, the positive coin, or side of the coin, is in this case that you have streaks of say 13, 14 winning trades a row. Beautiful, great. But when you have 13, 14 winning trades a row, and stay mentally stable, don't think that you're the greatest trader on earth. This is the same, only on a positive note here, in terms of variance, we can call this, in fact, as you have it on the losing side. Problem, and this is something you probably came across within or over the years here with your trading. It's in fact tremendously difficult, and I think everyone who trades and who has traded in the past and plans to continue to trade in the future will agree that it's really tremendously difficult to stay calm and rational here during such a streak. And today's webinar will be on some techniques, ideas, on also some techniques I use, in fact, in my trading, and I give you some anecdotes here how I treat these periods, which just happen. They happen. And it just doesn't mean that you're a great trader in terms of having a winning streak, or that you're a bad trader. It's just completely normal. It's something we call variance, and we shouldn't focus here on in fact the results, but what we should focus on is really focus on the process, which is where the professional trader, the long-term profitable trader, comes into play, and what makes the big difference between the long-term profitable trader from the losing trader. Those guys just not making it, and the reason for that is most of the time that the winning guys are focusing really on the process, while the losing guys, let's put it simply, are focusing on the results, on the P&L in this case. So first of all, let's here recall the webinar and give you the simulations we ran here based on these input parameters on the website. I was mentioning in regards, I had a book, a German book, so it doesn't really make sense here to make this German book a topic. It's called Trader, German topic. And I built a website to give people reading the book the chance to give them a place to go to use the knowledge which they can acquire within that book, and to really see it work out in the real world, or so at least in the real world, put quotation marks, but work with the input there, especially from a risk money management perspective. Very dry topic, and something you probably have heard about a lot, have read about a lot, and it's like, well, you don't really have a motivation to work with this. Sometimes it's very abstract. Sometimes it's just that you say, well, yeah, I understand. I shouldn't risk too much money in my trading in each trade, and I shouldn't over leverage the account. But it's not as something you can't really feel. And this is, I think, the big difference. It's very fascinating. Over the years, I just found out that people just keep are very, very, let's say, connected with you within webinars once you start to talk about trading psychology. So that was a very interesting topic. Some people just don't want to talk about this. And that's one of the reasons why, for example, we did some conferences several years ago, 10 years ago, and it was on the three columns in this case of profitable trading, and trading psychology is obviously playing a very important role there. And so the manager back then came to me and said, "Well, Jens, who do you think is a good guy here talking about each column in this case?" And then I came up with a guy I knew personally, which was also, by the way, the guy who introduced me to the book publisher for my first book back then here in Germany, and is a very renowned psychologist, trading psychologist. So there's no such thing as trading psychology, or there's no such thing as there's only psychology. So and then you adapt it over to trading, and he's very, very good. He's just very good, and someone who can really illustrate things in depth, but still make it accessible for you. So you get access to this, and you don't need to understand the functionality of the certain regions within your brain or something to grasp this. But he's just very good at this, but not well known. He's renowned, yes, within the world of psychologists, but he's not well known in the world of trading. So, and then the manager said, well, are you really sure that this guy is like the best fit for this speech? And we have, I don't know, someone else. And I was really pushing for this guy and saying, well, I want him because he's just the best. Believe me, trust me, he's the best. And so then, yeah, then politics started a little, and then it was like, okay, well, yeah, let's put it that way. So we can agree on this guy, but let's put him at the end of the whole conference, because people were just like, well, the best guys, the guys why the audience arrives at this event, were already then on stage, and people are happy that they saw something, connect something positive with us, and then we have this guy at the end, and let's see. And now the fascinating thing started. The event itself was really great, and I myself was also the guy who was responsible for keeping the guys at the event. And I said, well, stay, just trust me. This guy who will enter the stage at the end of this event is just it's worth your time, believe me. And the event was already quite extended at the end. And people stayed till the end, because this guy was just talking about psychology, something people could get access to, because he was talking about their feelings they all knew so well based on their trading experience they made in the past. So long thing short, so based on that, trading psychology, we come back to risk and money management, today's topic here. In this context, when it comes to Monte Carlo simulations, well, it's a very dry topic, and so I thought to give people something to rely on, respectively, to feel that, to see how that works in the real world, it makes probably sense to have this website. So long thing short, that was what I was talking about. And if once we put in these parameters here into now the Monte Carlo simulator, you get here those simulated equity curves. So given the payoff ratio of 1.31 to 1, respectively, the hit rate of 47%. And then here, this is the snapshot from below this graphic here. And there you have here the max winning streak in this case. So how many winning trades did you see, respectively? How many losing trades? This is on the right side here. And you can see 13, respectively 15. So this is just something which happens over the course here of 1,000 trades you run, or respectively 1,000 trades, quotation marks. So, but how you simulate, once you simulate this over 1,000 trades. And so now you have the 13 winning trades, respectively the 15 losing trades in a row. And that's what I'm referring to when I say it's completely normal, something you just get to see. And his name is Norman Wels. So I think the name is probably Andreas Grimm in this case. So probably you're from Germany. So Norman Wels. So you can also Google him on, or not just Google him, but probably on Amazon. You'll find a book on trading psychology. Probably, yeah, one of the best in the German space at least, and definitely worth your time reading it. I expect you to get something out of this. Let's put it that way. So coming back now to the strategy. So now you have this, and then you can see this. Okay, well, it's just what something happens. Okay, it just happens. You have 15 losing trades in a row. Mathematically speaking, it doesn't change the overall profitability of this strategy, or it doesn't mean that you're trading an approach which is not profitable. You can see this here. So the Erwartungswert in Germany, in German, it's expectancy of the strategy, and then once this number is greater 0, this is a profitable trading strategy. excluding certainly trading commissions and so on and so forth. But even with trading commissions in this case, you will see that's a proven profitable strategy over the long run. And so now the thing is, I mean, you're sitting in front of your screen. There's another anecdote I can tell you. I had a webinar series, we could call this, and then I was the guy trading the market opening during, I think it was each Thursday, if I'm not mistaken, so on. And then I was trading US market opening with this strategy. And at the beginning, so everyone is going crazy, like, wow, live trading, this is great. I have to access this because this guy is really now kicking it. And so now you start out. This is a strategy you trade every day, every Monday, Tuesday, Wednesday, Thursday, Friday, and then again and again and again and again. And you can also see here, if you have only one day with a hit rate of 50-50, it's like a coin flip, if slightly worse than that. And in addition to that, you could also here run into a streak where you have 3 weeks a row, 5 trading days a week, 3 weeks, and you have each day a losing day, and thus each Thursday, once the event happens, a losing day. So now I start out, first event, 200 participants, losing trade. So you try to make this more of an educational event and explain to people what you're doing there and so on and so forth. Next week, we already went down to 150 people. Again, losing trade. Next week, next Thursday, we are already down to below 100 participants because people are like, well, why should I continue to participate within this? Because last 2 trades, we're losing trades. Obviously, the strategy doesn't work. The interesting thing was that after 2 weeks, we were already ahead because we were trading this every day, and I could already illustrate that we were ahead. Still, people expect you to perform once they access this event, and then they want to see the trade play out. That's why they are there, especially if they, and this is most of the time happening, just duplicate what you're doing there. You can say, well, don't do this. People will say, well, this guy knows what he's talking about, so I do the same trade as he does because it will be certainly a winning trade, which is not the case because trading is not about being right or wrong, but it's about being big enough once you're right and cutting your losing trades short while you're on the wrong side of the trade. So and there's this interesting thing now is that once I traded the strategy, that also perfectly illustrated here that people were really focused on the result, which I can completely understand. But still, once you now say, okay, I'm trading this strategy, where can I get the confidence to continue to trade? And it's just one strategy here. So you can trade every other strategy and we'll probably face the same thing over and over again. So like you just say, well, I'm just having a bad run. I know that the strategy works. I know that the hypothesis and in general that the idea behind what I'm doing here is completely fine, but still right now the market environment just changed. So look at the market. I mean, that's a perfect illustration. It just doesn't work right now. And then you face such a losing streak. And some people are likely to throw in the towel and say, well, I switched to another strategy. It's not that they completely stop trading, but they probably then switch over to a next strategy. And the problem now is that with this, the chances are very high. If you have this attitude with one strategy, you will continue to have this with the next strategy and the next strategy and never really make it and never gain the consistency due to lack of confidence in your trading. And this is thing now where the question comes into play: what can I do here to keep cool if I face such a streak in my trading, which is completely normal? Again, it's not just losing streaks, it's also winning streaks. Something very important to note here. And the losing streak is a negative side because now you see already your account balance dropping. If you're on the right side of variance, let's call it the right side of variance, and you see the equity curve growing and you have 4, 5, 6, 7 winning trades in a row, you just think I'm the greatest trader on earth. And there's also some stories I could tell you, and it's you can be long time in the markets. You just sometimes have this feeling. It just is within you, let's say. So it's a sign that you need to change somehow. So it's not just losing streaks, which we will focus on today, but it's also on the winning side. And I have this from time to time. After 5, 4, 6, 7 trading days in a row where I perform well, where I see my equity growing, it's just like, well, today, well, I don't really need to focus, let's say, on my A+ setup, but I can just throw in some bits here because I think the squeeze will happen. We will break out here on the upside, and you also have now more equity in your account. You increase the size, and this is then the moment once the trade does not play out, and you just realize afterwards, well, that was I was overly confident, and I risked too much money, which doesn't mean you crash the account, but still you see a certain backdrop in your equity curve in general. By the way, in this context, let me just here bring in the 3 tops already, and while you study these, let me please just write down some stats here on today's trading, and then stocks I'll be watching. So you probably have seen the big reversal yesterday in the Qs, and it will continue today, especially in 2 stocks I'm watching, probably especially one in Square, respectively in Block, the company which is now run by Jack Dorsey, the former CEO from Twitter. This is where you probably have heard about the name. And I think these 2 stocks, Square will be hot today. And that's why I have to write down some stats here, which is also of importance in this context, because now just imagine I have a losing trade. Afterwards, I have to really check what went wrong. And I need clear, objective numbers I can work with and find out, is there probably a problem with my, let's say, in this case, stock selection? Did I probably trade the wrong stock in this context? Very important information, where you then can say, okay, what went wrong in terms of the stock selection today? Where is my probably process flawed to spot these? And then you take it from there. Okay, so let's now criticism, by the way. Criticism, is it right? Yeah, I think so. Criticism, that should be, oh, that should be better. So first of all, there's no such thing as a blueprint. So, but going through the following steps that might be helpful, respectively, makes probably sense. So first of all, you should focus on constructive criticism. So it does make sense to just you had a losing trade, let's say, and then you tell yourself, I will never make it. I'm just a loser. So it just doesn't make sense. I'm just bad. That's not how you deal with a losing trade, because that's first of all, it's not true that you're a loser because of one trade, because trading, there's some element of luck involved in each trade. So it's not that you enter a trade and that if you see a winner here in this case, that you're the greatest trader on earth. Well, you will you can be considered a loser once you're on the wrong side of variance. Everything can be cool and still and great, and everything can perfectly fit once the trade occurs in your platform. You enter, and then it just goes against you. Just what happens. The same thing is true on the other side. So I'm coming back to winning streaks, where you just get overconfident, and then you say, I throw in a bid and just say, okay, the breakout will happen, and it really happens. The market runs, and you'd say, well, sure, it went higher because I'm the greatest trader on earth. So this is just not true. It's there's a component of luck involved, which you need to be aware of, and which makes it necessary that you find constructive ways to criticize yourself. This is not just true for losing trades, but it's also true for winning trades. So in my case, when I have a winning trade, for example, not just most of the time, every time, I just wonder where is a chance to be better, bigger next time. So I think this is crucial for the long-term success. Then also, in addition to that, you need to be, and this is where the adaptations come into play. So where can you improve as a trader in general, and to yeah, to let yourself grow as a trader. And then the component mental stability comes into play, and what techniques we can use here. So this is something which all in combination then helps you to keep cool if you're facing a losing trade. So first of all, let's have a look now at this first top, constructive criticism first. And the simple question you ask yourself, especially after a losing trade, is: did you follow your own set of rules, respectively, the proven profitable trading strategy? Did you everything which you told yourself before, which you wrote down? Did you follow each point on your checklist, and you could check each point here? So if the answer is yes, well, don't blame yourself. Not every trade can be a winner, right? So it's like this is just happening. It's bad luck. It's you're on the wrong side of variance in this case, and just this is just the way it is. If you didn't follow your rules, well, then don't look for excuses, but instead you made a mistake. This is completely fine. We all make mistakes. This just happens, but still, now you need to address the mistake, and then you formulate a solution to make the mistake not again, and then move on and take it from there. So give you a perfect example, which just happened to me several weeks ago, yeah, something like that. So I had a very good run starting from the end of January and then into the month of February. So it was 2 weeks. I was just like, I had perfect stock selection. I had a perfect mindset. I had complete focus. I was really, I was in sync with the market. So there was really, I had the feeling there was nothing which could stop me. I could really also go into the order book, really short-term scalping and trading opening drive plays right into the open, for example, where I know that to perform well here, I really need to be in my zone. And I was so focused and so, on the other hand, so relaxed that I really built confidence that way. And the confidence grew with the rising equity curve, really great. And then there was one day, there was a play happening, it was in Harley Davidson. There was a play happening after they released earnings, respectively the day after they released earnings, and saw already a sharp run higher. I think the stock closed something like 15% higher. And there's a play I usually trade based on that. And now the thing is, this is the setup which presented them itself. Then I said, well, this is a A+ setup for me. So this is a setup I need to be in. This is my bread and butter trading setup, let's say, for the day. And then I said, I just thought like, well, do I really want to trade Hawk? So this is the ticker symbol. Do I really want to play Harley today? Because I'm not really sure, because there was so much pre-market volume, which I just wrote down here. For example, the spread was like a little too wide here, so not really nice structure or something like that. It was just like I just didn't look difficult. And then I saw, well, wow, look at this. You probably have seen, or probably you found it out yourself, AMD, so Advanced Micro Devices, so AMD, the processor semiconductor company, is probably one of the best trading stocks right now in the market, and saw a very strong run into the earnings, crushing earnings, and then rolled over and saw a sharp pull in. That was into the end of January. And it traded back up to the earnings highs that was around 130, and was like, well, if we can make it above that level, I think AMD is probably is ready for a strong breakout on the upside. And in addition, with my recent trades, which I played extraordinarily well in beta stocks, I was just like, well, why should I focus on a slow moving stock? Okay, yes, it's my setup. I should focus, but why should I focus on such a slow moving stock? I should look here for action. I should look for the beta play in this case. And thus I decided to skip Hawk that day and focus fully on AMD. I played a bad price. It sounds probably harder than it was, or worse than it was. It was okay. So I was still within my risk parameters, everything cool. But then at the end of the day, I just found out today could have been an extraordinarily great winning day if I just played hawk for my second day in this case. So, and why did I do this? Well, this was the moment then when I focused on where can I improve? What happened here? What was going wrong? It was me getting overconfident. It was me saying, well, I performed so good. I'm so in sync with the market. I'm so focused. Still, I'm very relaxed that there was nothing which could go wrong. What I then found out when carefully watching, it was like, well, the place you made in better stocks in this period where you performed so well was not just because you worked well, but in combination with your stock selection, you worked so well. While now you switched on a play which had no real true fundamental catalyst behind this, or fulfilling your need for a second day play as Hawk did, for example. But it was like more like, well, it was just a beta stock. It was just a stock which fulfilled my need for volatility, increased volatility, and potentially a strong move. And nothing more, nothing less than that. And that's just obviously negative, long-term minus EV, we can call that. So with a negative expected value. So given that, I learned something out of my losing trade. It was a price I had to pay, but it wasn't that I criticized myself, but it was constructive criticism. I really wondered what went wrong here. So the next time, and that was last week or so, I'm not really sure, probably. I've then focused again on a high beta stock, was Roku in this case, also very beaten down after earnings, and then again on the opening drive play. But why did I focus on Roku? It wasn't to make the money back. I just lost an AMD or something like that. No, it was like I focused on the stock because it fully it fulfilled all the criteria. I had all the checks in my favor for such a play. I then went for in Roku that day. And that's why I was completely fine with trading it. And I remembered myself, even though I just broke even that day. So it wasn't that the play really played out, it just didn't move on the downside. So you can check this chart. You will see that we didn't reach 100, the psychological barrier, but instead we saw short flush, but did that really push us below 100 in this case? And then we took off from there and I was stopped break even that day. So but at the end of this trading day, I could say, well, I improved massively compared to the last trading day. And this is where you focus on the process then. And this is where the constructive criticism comes into play. If you have a losing streak, find reasons why you performed under, where you performed worse than you usually do, and then take constructive steps from there and just take it from there. So really, but do and do the work here, the homework, sit down and wonder what went wrong here. And therefore you need clear criteria. You need to know yourself. That's very important. So self-confidence is one thing you need to be aware of when it comes to, I think I'm beating the market right now, but it's also very important to know yourself well. So if you start out trading, you really, I really recommend writing down who you are as a person, and not just write down for yourself, but also talk to someone you know well and who knows you well, and who is open with you and tells you where are your strengths, where are your weaknesses, and take it from there. Really build from there, and then develop a profile here you continuously work on then in the future to be capable of doing this step here of constructive criticism. Adaptations in your trading. So question is here, what strategy do you trade, or did the market conditions change, for example? So obviously it's important. You can, well, I think we can all agree on this, especially after the big bull run we've seen over or post COVID and the pandemic lows in March 2020, and then we just went vertically on the upside, and it was a very strong bull market, and this market changed. That was into the end of 2021, and especially at the beginning of 2022. Many people will sit in front of a screen, probably especially those coming completely new into the trading arena, finding a complete different market environment. And what went so well over the last, let's say, 12 months completely changed now within 2, 3, 4 weeks, probably 2 months in this case. And so given that, you need obviously to know not just what are your strengths in terms of your mental capabilities, but also need to know what are the strengths of my trading strategy, what I'm looking for. Am I a breaker trader, for example? So if volatility decreases now and there's the volume flowing out of the market, let's say, what we can sometimes see most of the time is that breakout approaches where you don't adapt to the changing market conditions don't perform as well as they did under elevated volume, respectively under increased volatility. So if there's a high chance of a dynamic breakout on the upside, let's say, or on the downside, depends on which side the breakout occurs. Well, and you have an environment where then there's also money coming in from the sidelines, let's say, and there is a chance of a trend developing from there. Well, obviously, this is a favorable market environment for breakout strategies. While if this is decreasing, and for example, during times, let's say around Christmas or bank holidays or something like that, so the volume is flowing out of the market, respectively, volatility decreases. Well, then chances that the breakout, which will happen rather sooner than later out of the range you define, well, will probably not work out as well as it would be or would play out once there's increased interest into whatever asset you trade, and the breakout happening under increased volume, respectively, under or within in the stock or asset which is currently hot, and thus market participants pouring in and pushing the market in direction of the trend of the breakout. So to make a long thing short, you need to know what you trade, and then you have to answer the question, are we still in a favorable market environment here? And if the answer is yes, well, then you probably just here caught on the wrong side of variance. One losing trade, two losing trades, just happens. If the answer is no, and the market environment completely changed, you have to adapt. So this is your this is what you need to be doing then to continue to perform well as a trader in this case. So there's plenty of ways now to achieve that. First of all, if you find yourself in a changing market environment, first of all, it's not just about completely change the strategy. It could be just a short period of time, let's say like holiday season or something like that. That's why the market conditions change, but there's a fully automated strategy and you keep on trading at. Well, what you need to do then is certainly cut back the position size, while you need to increase it once market turns in your favor again. How do you measure that? One way is, for example, to use short-term moving average on your equity curve. So could you say, well, I have, for example, and let's say, I don't know, EMA 20 or so. I have it overlaid on my equity curve. And then I say, well, if I cross from below the EMA, I reduce the position size, because obviously now the system is about to enter a drawdown period. And with reducing the position size, well, obviously you reduce the negative impact that might have the unfavorable market conditions on your equity in general. And once you turn back above that, you're not probably picking the right time or the perfect time to increase the position size again. But this is just the first step you can do in this context. Well, once you see that the market pulls or pushes back above the exponential moving average 20 in this case, well, then you take it from there and increase the position size again, especially if you see an acceleration, if there's other parameters like increased volatility, if you see that the volume picks up, if you're trading stocks, for example, something like that, well, this could be then the trigger to increase the position size again and then ride the wave as long and as big as possible, risk parameters having in mind all the time, certainly, and an adequate risk and money management plan, but take it then from there until, well, the next unfavorable market condition environment occurs, and then reducing the position size once again. So that's around adaptations in your trading or in your trading strategy. And then we come to the last button, let's say, so around mental stability. Yeah, thank you. Let's have a look here on mental stability. So questions, who are you? I already asked this question, who are you? And do you become emotional in your trading? So this is very roughly speaking here, because we need to go into further depth, because there's many emotions in trading. It's not just about getting angry. It's also about getting overly confident. It's about getting fearful. It's about greed, fear, anxiety. Did I miss something? Hesitancy for you, probably. So that's certainly many emotions, and you need to really build a profile on this. But still, you really have to first of all understand who you are and who you become under certain conditions. So some people, once you put them under pressure, they react in a very defensive way. So they're like, okay, I feel now under pressure, and I try to hide somehow. There are other people, you put them under pressure, and then you'll take their heat. So they will stand up and say, well, I don't like this. So now both is counterproductive when it comes to trading. So the guy getting defensive, even though it's like getting defensive is like, okay, this is probably a little better when it comes to trading the markets, because getting defensive could mean reducing the position size. Getting defensive could mean just turn off the computer and just return once you are calmer, let's say. Someone who is getting offended and really stands up here, and with that being said, is probably I'm willing to take revenge when it comes to market. Well, this is probably not the best way to cope with a losing streak in this context. We might probably agree on that. But the thing is, what all it comes down to is like, you have to find ways to regain confidence in your trading, and not just in your trading, but also in yourself. And once you rebuild your confidence, then start to take on momentum again. So first of all, again, self-confidence is not just about I feel great or I feel completely down when it comes to my trading, but self-confidence is also know yourself. So in Germany, the word is Selbstbewusstsein, so self-confidence. And it's a friend of mine usually says then, well, it's about sich seiner selbst bewusst sein. So he's playing with the two words this word self-confidence is built on. So confidence, and then you're getting aware about your confidence in this case. So and this is something which is very, very important. And this is not about having a great ego and thinking I'm the greatest, but it's more like really know yourself well and know what works well for me and what doesn't. What do I need to do each day before I start? For example, I have a clear routine. I know I have to meditate like 50 minutes. So just calm down, relax your mind, try to get to a clean state, let's say, not let interfering thoughts from outside here with your overall performance. There's also other ways to track whether you might perform well for the day. For example, you might track your sleep. You might probably say, well, if I sleep well, it's easy for me to get into my zone and reach my highest level of performance here, so peak performance level in this case, and then take it from there. If I haven't slept well, probably I should probably take a step back. That all this might then will result in you performing better, respectively reducing the position size once you know, well, I haven't slept well. Probably I was out with friends the evening before. I had an argument with my girlfriend, with my wife, I don't know what, or her husband in this case. So probably there's also female traders here. And just this is all weighing on my performance and the outlook of my performance. You really need to be aware of that and then take it from there, and how to overcome a losing streak in this case. And so as you can see here, so it's unbelievably important to have something completely different than trading besides your trading, obviously. So like working out or go to the gym, meeting with friends, relax with your family, play with your kids, talk to your wife, talk to your husband, to whatever, have a great dinner together, something like that. Because it helps you to completely cut off the emotions connected with trading then, and recharge your batteries, we can call this also. And this is also something you should keep in mind to overcome such losing streaks in your trading. I just, by the way, I just had to have a look here on the watch now. We have to hurry up a little. So let's sum this up. Losing streaks in trading are completely normal. First of all, this is it's winning and losing, but it's only normal if you know what to expect from your strategy but also what you can expect or should expect from yourself from a mental perspective in terms of staying cool, rational, and maneuvering your trading account without prejudice to significant losses, which becomes possible. And there's 3 very effective steps. I hope that became clear here. You could go through, which are constructive criticism. So the question, first of all, did I follow my rules? Yes, great. Variance, negative variance in this case, no. Well, why? And then take it from there. Adaptations in your trading you need to make, probably because market conditions did change, or your overall well-being suffered from whatever external source. And then try to overcome this, first of all. And then once you overcame it, well, then start again, over again. And then also the question in terms of mental stability. So this is like, it's like, it's not blur, but it's like there's no border between the second step and the third, in fact, but it's just like a how can I say that? It's not a weak border, but it's not a hard border, but like you flow into this mental stability aspect here. Do you perform in your zone right now? If you don't, well, then probably you need to find ways how to achieve that. Is it because of your sleep, living circumstances? Are you effective from formal trades in terms of losing trades in this case, and so on and so forth? And that's a way how to in fact tackle losing streaks, but also winning streaks. So while winning streaks are great, still you need to be aware of them, and you need to also see if it affects your trading in a negative way, getting overconfident, taking let's say trades which are not within your, let's say strategy playbook or something like that, but you're taking marginal trades here, you try to force it, and then you can find yourself in a spiral here on the downside, even if you're on a winning trade, and then you enter the losing streak. So long thing short, how to tackle losing trades. I hope you just got some insights and some thoughts you can think of over the weekend. And if you like what you just witnessed, then leave a thumb up here. If you're watching this now on YouTube, I hope I answered all your questions. And if you want further information on Admirals, check out the website, admiralmarkets.com. Check out the email contact there. I'll reach out to them if you have any questions. If you have any questions on the webinar, also post them right below the recording. Don't forget to subscribe and to leave a thumb up here. And a fully regulated broker, very important. So please read it carefully, the risk disclaimer. That's it from my end. So all the best. Happy trading. Talk to you next week again. It will be on, I just have to look it up. I'm not really sure what next week's webinar topic will be. What I know is certainly that I will talk on Wednesday to you. One second. Let me just check here if I see that. Unfortunately, no dates. I'm sorry. So, but I will be here. Oh, it will be on fractionals. It will be on fractionals. Now I remember. It will be on fractional share. So what I forgot to include here in terms of a slide, we will talk in details then next week. So stay tuned. Happy trading. Have a nice weekend. Enjoy yourself. Talk to you next week. I look forward to it. All the best. Bye-bye.